Hey gang, do you know what the number one reason is most all mortgage loans blow up and are denied in underwriting? It is the debt to income ratio. What I mean by that is there's a lot of things that home borrowers do not understand. For instance, if you have student loans that are in forbearance, most all student loans are in forbearance right now during COVID. When you're in college and you have a student loan, it still reports on your credit report, but no payment shows up. Well, Fannie Mae and Freddie Mac require us as lenders to use 1% of the balance for a payment or 0.5% of the balance for a payment depending on the loan program. When you calculate this into a borrower's debt to income ratio, it could have a major negative impact on them qualifying. Number two, borrowers going from W-2 positions to self-employed positions. Even though you've gone from a W-2 position to a self-employed position in the same line of work and you're making double or triple the amount of money, underwriters are going to want to see a 2-year history of that on tax returns in order for it to be able to be used in most cases. So keep in mind, even though you've left a company and you started your own and you're making more money, can't use the income unless you have a minimum of 2 years on tax returns, all right? Another reason, new purchases after you get pre-approved, such as financing a boat or co-signing for a car for your kids or purchasing a new vehicle yourself. Lenders always do a credit checkup within a few days of closing. We go back to the credit bureaus to make sure that nothing major has changed. If there's a credit inquiry on your report during that time, if new debt resulted, we need a copy of the note and all of the instruments that go along with that note, and a lot of times it really negatively affects people and they do not qualify anymore. Another one, and the big one, is debt obligations that are not included on a credit report, such as probably the number one obligation is child support. Child support normally is not shown on a credit report. In some cases it is, most cases it isn't. Always be honest with your lender, be upfront. If you went through a divorce recently, let your lender know what your child support obligation, even your alimony obligation is. I can't stress this enough. Also, timeshare payments typically do not show up on a credit report. Lenders always do more than pull a credit report and take a loan application. There's all kinds of things that are done behind the scenes, other reports that are pulled to where everything about your financial background will show up. So if you have a job change or are going to go through a job change during the mortgage process, in some cases it's fine. Be open and direct with your lender. Let us know. If you're going from a W-2 position to another W-2 position, maybe taking a little bit less base salary and more commissions and bonus structure, that could hurt you as well. Bonus and overtime and commission income falls under that self-employed category as far as needing a 2-year history of it in order for it to be able to be used. So I can't stress this enough. The debt to income ratio is by far the number one reason that loans blow up and are denied in underwriting. Always be open and upfront with your lender. My team and I have 35 years plus experience. We've been through all of this. We've seen it all. We're glad to help you, walk you through, avoid any pitfalls in the beginning. Please reach out to us anytime, and we'll talk to you soon.